What's up, traders? I'm the Inner Circle Hotshot. I am not an educator. My educator is ICT. For free education, check out his YouTube channel, The Inner Circle Trader. With that being said, this channel and video is for entertainment and my own learning purposes only. This is not financial or trading advice. I am not a financial or trading advisor. Please trade at your own risk. Now, in this video, I do want to apply. By the way, before I start, I do want to thank y'all. 38 subscribers on this channel is really cool. I do appreciate that a lot. I do want to apply this daily bias checklist, and I want to show you how you can possibly get in on an entry, um, anticipating that next daily candle. So let's go to Euro USD. Um, we're just gonna go from a clean chart. Let's say that we start from like right here, for example, okay? Now, obviously, we know what price is doing. We've seen from hindsight. But if we go to our checklist and we ask ourselves, of course, if you don't know what daily bias is, this is the next draw on liquidity. You want to try to get a read on where price is more likely to draw to next. Is it going to draw higher to an old high or lower to an old low? And until it reaches that, you stay with that bias. This actually allows us to go in each day and anticipate either an up close or down close candle in alignment with that bias. So first step to read daily bias, you want to first identify the most previous run on liquidity. This is an obvious swing high or low. And from that point, you want to recognize what phase daily price is in. Is it retracing, reversing, expanding, or spool, which is spooling, as ICT says. This is actually the best phase to go in and hunt for what's actually going to be explained below in these steps. But if it's none of these three, it's deemed consolidation. Until we can recognize a different phase, our bias in this phase will stay neutral, but this will allow us to know what kind of candles to anticipate. So as we go into Euro, you can see that this wasn't the most recent draw, but it drew here, reversed. Why did it reverse? Because this is a market structure shift. If you don't know that, go watch ICT's 2022 mentorship. You'll learn. Comes down after this close right here. This is the valid fair value gap that we want to keep our eyes on. So if price comes up in there, of course, that's going to be, it's going to be a retracement, then expansion. So you can see that price. There's also one right here too. That price respected as well. You can see that price created this swing low right here. So this was the most recent draw on liquidity. It drew down, took out this low right here. Anybody who was buying and had their stops below here, they got stopped out. Anyone who was selling on a breakout right here, they got pulled in. The price reversed, went up. It didn't reverse, but price turned around and went up, tapped into this daily fair value gap right here, and then price began expanding or spooling away from this area to target this liquidity here and maybe this liquidity down here. But if you look to the left as well, there's also these fair value gaps here. That price you can see actually rebalanced. So that imbalance has been rebalanced. We'll take that off. Currently, bias in my eyes is bearish. From this point, it is in an expansion phase, in my opinion. You can see here, it ran out this liquidity. It actually created a swing low with these three candles right here. Retraced, what did it retrace up into? It retraced up into these two up close candles. ICT would consider this an order block. I would think he would consider this an order block. In my last video, I did state I prefer fair value gaps to enter off of and to prioritize, because order blocks, they're just too confusing to me. But you can see that price traded up into that, began spooling. Now, where is it spooling to? There's this low that price can target, and ultimately the low down here. Now, with that being said, at this point in time, this here is Tuesday. Okay, so for Wednesday's candle, we want to anticipate, according to here, since if price is bearish and the previous day was bearish, then the next day that we trade, we expect the previous day's low to be taken out and the previous day's high to be respected, like supported. In other words, there shouldn't be any movement above the previous day's high. So let's go ahead and see this. We want to see price open. We want to see it Judas swing, that's the manipulation, distribute, ultimately take out this low right here. And that is what we are going to anticipate for this move. So, of course, we want to see this high of this candle get respected. In other words, we don't want price to violate that. And we want to see this low get taken out and hopefully this low get taken out. So if we drop to our, knowing that now we drop to our 15-minute, this is what we want to anticipate for the next day now. This is going to be for Tuesday, right? So this right here is that day's candle. We're going to go ahead and skip to the 2 o'clock London first, so we could just go over how you can take advantage of this, maybe from 2 to 5. That's the London kill zone. And then from 7 to 10, that's the New York kill zone. So that's 2 to 5, and then this is going to be 7 to 10. So these are the only times we're going to look to take entry. Okay, now we want to wait for the midnight candle to open. So that midnight time is going to be right here at 00. Of course, if your time isn't put to New York UTC -5 New York, you can do that down here. So what ICT suggests that you have it on, so that way you're in alignment with New York time. So right here, we will go ahead and fast forward. Now, there's the midnight candle open. We want to annotate the open of midnight, okay? The reason why is because if we're bearish, we're anticipating a bearish day the next day. We want to get in as close to or above that midnight open to catch the wick of the next day to continue it down. And ICT says you could catch really big moves off of doing this. Okay, so now that we have that 0 midnight open marked out, like I mentioned, we either want to be entering as close to it or above it as a seller. Okay, but we want to wait till price gets to 2 o'clock, and then at 2 o'clock we will identify some potential liquidity that price could be either running currently, or it could run, or we'll see what happens when it gets there. So let's play out one more candle because I believe that's the 2 o'clock. No, one more. Okay, so this is 2 o'clock now. 2 o'clock has now opened. Instead of the 15, I'm going to drop to the 5-minute. You can see here that on the 5-minute, price ran out liquidity right here for stop run. So anybody who was selling right here and had stop losses above these swings, they got taken out with this wick. Anybody who bought on the breakout right here, they got triggered in, who had a buy stop above here, who thought that it would buy, they're now getting taken down. And whoever, you can see here as well, there's liquidity here too. Whoever bought here and had their stops below here, they got taken out. Whoever's got a sell stop here, they got triggered in. So we'll see what happens there. But since we are a seller, we want to see price right here. Take out the liquidity. There's potentially this liquidity here that it could take out as well. But at this point, as soon as price runs liquidity, price is above our open of midnight, we're going to drop to the 1 minute. On the 1 minute, you want to anticipate a market structure shift, okay? You can see here that, and the rules to my strategy from back testing, well, it's ICT strategy, but I kind of implement different rules and see it differently. But right here, the setup can take place prior to 2 o'clock, the London Open or the New York Open. And as long as the setup forms and the entry is within the time frame, I would take that entry. But you can see here the liquidity, it was barely wicked, it wasn't really ran. However, there was a market structure shift with this leg right here. Took out this low right here, market structure shift. There was a fair value gap in that. As 2 o'clock open, we could have been monitoring that. And 2 o'clock open with this candle here took out, violated my fair value gap, the one candle. In my rules, the fair value gap is a valid fair value gap as long as the one candle of the 1, 2, 3 fair value gap pattern holds. In this case, it was violated, so this fair value gap was not valid. I would not have taken that entry. Okay, but you can see here, price reswept out these relative equal highs. All of this is relative equal highs. Price took it out, market structure shifted off of this point here. This is a valid market structure shift point. Let me go ahead and zoom in right here now. This is a market structure shift candle. Now in my rules, you must wait for this next candle to close and then go back through and look for the fair value gaps. Now there's a fair value gap here. It's real tiny. It's real tiny. Probably wouldn't even consider it. There's actually no fair value gaps here, in my opinion, because this one even got violated right here with this one, with the one candle getting violated. But there is this breaker block right here. This is a breaker block. And this right here can also be considered like an order block. Why is this a breaker block? Well, ICT's breaker pattern, it has to take out liquidity first and then immediately market structure shift. It can't be like take this out and then it does this and then failure swing high and then market structure shift. Can't do that. It does this, boom, boom. This is a breaker. So right here, as soon as price taps into the breaker, you could be a seller here, stops above the swing, it would be about 5.5 pip stop. And you can target that previous day's low down here since we anticipate price to take that out, and that would be about a 1 to 3R. Okay, let's go ahead and play that out and see what happens. Again, we are taking this entry at 2:11 in the morning. This is New York time. Okay, London kill zone. And we got stopped out, and that is totally okay. You know why that's okay? Let me go ahead and remind ourselves. Get over the concern about being right every time. Put aside the idea of perfection because you're not going to have it perfect. You're not going to get it perfectly, get out perfectly, not going to have the perfect risk, the perfect asset, etc. You will always find reasons to be wrong. You want to embrace imperfection, embrace the idea that you don't have to know everything. You don't have to be right. Being right is not equivalent to being profitable. That's important in the words of ICT. So we were wrong right here. Let's just say that we entered 2%, right? 2% loss. Okay, so with ICT, he has this risk management plan put in place where you could take so many losses and you won't even get down that much. So you're going to cut your risk. This next trade, I'm going to take a 1%. Okay, so we lost this one. And as you can see, price is actually running out this higher liquidity here. It actually ran it out. Boom. Let me just bring this over here. We know that we lost side. So once it ran it out, it had the market structure shift point is way down here. Let's see what it does. And this is a market structure shift candle. Next candle opens. Boom. So at this point, we're going to go back through this leg and identify some fair value gaps. There's one right here. There's a huge one right here. There's one up here. It's a little far. So for now, ICT says if there is more than one fair value gap, you want to prioritize the first one, of course, because if you're putting your entry up here and price only taps into this one and then takes off, you're going to be kicking yourself in the butt. But if you set your entry right here and just take into consideration by putting your stop loss above these ones, yeah, it'll be a bigger stop loss, but at least you'll be a part of the move. And that's better than not making any money at all. Don't be greedy, just take what the market gives you. So in this situation, we'll go ahead and we'll take our entry here. This one is a little far. So what I'm going to do is I'm going to prioritize these two for now. Okay. You know what? No, because I will be kicking myself in the butt if I get stopped out. All right. So I'm just going to go ahead and prioritize all three, taking entry off of the first one, first point of entry. And this entry will also be in close proximity with the midnight open, which is this line right here. Now ICT says the open, whatever price ran above, we duplicate that down. And this is your realm for entry. As long as you enter within this proximity, then that is good. Okay. And again, we would target that previous day's low down there. It'd be about a 1 to 2 point something R. Let's see what happens. I'm just going to go ahead and play it out, play it at 3 times speed. Okay, we got triggered in. And at this point, let me just pause it. We can see there's liquidity that price created right here. Price is building up a lot of liquidity above and below. It could be a possibility that price swipes this liquidity up real quick and then continues back down. This fair value gap wouldn't be invalidated. In that case, it wouldn't be until this wick gets taken out. Then this fair value gap would be invalidated. And at that point, price would be tapping into this one. So it would be a good thing that we actually put our stops above here. Okay, so it took out liquidity to the bottom. Boom, continue taking out liquidity. Now at this point, once it takes out this liquidity, you can claim partials. In my rules, I do not claim any partials. ICT does say pay the trader, but long term, I want to continue to hold like 1 to 3 Rs and whatnot, 1 to 2.5s or something like that. So I do not claim partials. I feel like claiming partials takes away from the full reward. Obviously, it does. I mean, that's like a duh moment, but I wouldn't. So we're still in the kill zone, and boom, we just took out that previous day's low right here. Okay, so that was a beautiful trade. Right there. Obviously, it was a 1% risk because we cut our risk. So in this case, this hit, let's just say it hit about a 2.7 on. So that would be 2.7%. We lost 2%. So in total, we are up plus 0.70%. Okay, so that's what we're up currently. All right. Now, how can we revert back to 2%? I have it written. Let me go back to my risk management really quick because I have it written. Risk management plan right here. Boom. So 2% lose, 1% must win back half the 2% loss. So that'll be 1%. So in this case, we won back yeah, we won back our money. We won that back. So now our next trade, we can actually take a 2% risk on the next trade. Okay. If that makes sense. So now that was our London session move. We already caught that. We're gonna go ahead and fast forward up to the 7 New York Open. So that way we can go ahead and see how we can take advantage of that time and see what price is doing around that time. I'm gonna open up about 2 more candles. I think that's fine. Okay, so I'm gonna bring it right here because this is a 7 open on the next candle. This is 7 o'clock open. Okay, so at this point, this is the 7 o'clock open. Midnight open is way up here. At this point, we've already extended way down here. So after price has distributed, this is all the distribution. Price will likely, we're at the low of the days, the new days wick, we're at the low of it. So it's likely that price will retrace back up. Maybe we could see at this point, there's these relative equal lows. Possibly price can take these out. And at that point, you could drop to the 1 minute, look for the market structure shift to buy. But again, our daily bias is bearish. So right now, we would want to see maybe this high get taken out. And at that point, we can maybe look for some more continuation lower. Let's go ahead and see what happens though as price opens up. I wouldn't consider this one, really. I want to see this one. This one's more cleaner. This one's more obvious. Let's see. So now that I just took that out, we're going to drop to the 1 minute and we're going to look and anticipate for a possible market structure shift bearish. Okay. Okay, so this just created a swing high between these 3 candles. And the market structure shift point is this candle here. It's way down here. So I'm thinking that it's going to create like a higher low, continue back up, and then maybe it'll break that low. But let's see. Okay, so there it is right there. There's the higher low, maybe with the next candle. Yeah, so there's the higher low. Took out more liquidity. So if price does shift, it does have to break this point right here. This would be the valid market structure shift point. Continuing back up. This is just this is nothing. This is just marking out our 7 o'clock um New York kill zone. Okay. So obviously we're in our kill zone, so I'm not gonna mess with that. So right now, if we just look, what is the 5 minute doing? 5 minute is expanding right now and took out this liquidity. There's all of these little highs right here that it took out. could potentially be coming to take out this liquidity next, okay? But we are still looking for that 1 minute market structure shift. So this right here would be a market structure shift. It's not a breaker pattern though. It could have been a breaker pattern if it did this, but instead it created a swing low, failure, swing high, and now it's market structure shifting. This next candle that opened, okay, so now there's actually no fair value gaps within this shift leg right here. This next candle had to open, just barely make a little wick or make no wick at all and continue down, then there would be a fair value gap that we can enter off of. So in this case, there is no entry here. Price is likely to continue back up for more. Let's see what happens. Okay, so price ended up ultimately taking out that 5 minute liquidity that we marked off here. There's more liquidity up here. That 5 minute could be taking out next. And again, we're still just looking for that 1 minute market structure shift. So right here, this is considered a swing low right here because it made 3 wicks right here. This wick was higher, this wick was higher than this wick right here. So this candle shifted structure. This candle is the one that you need to close to look for fair value gaps. Obviously, there is none, so we don't really have an entry here. So we're just going to play it out, see what happens with price. Okay, so now here's another shift. Boom. This next candle that opens. See, no, there's nothing there. There's nothing there. Another thing you want to keep an eye on is that displacement. There's no displacement. This is a displacing candle to the upside. That's a huge displacement. Obviously, we're bearish, so it doesn't really matter that it's to the upside, but that's what a displacement looks like. So at this point, we're like really close to this high right here. I still think that it might take it out. The market structure shift bearish, but with this candle shooting up, taking out these highs here, and then immediately coming down and taking out this low here, that's a market structure shift in itself as well. So I would mark that out. This candle shifted it. The next candle I would want to see, and that's totally okay. Because there's a fair value gap right here. As soon as that next candle, which is the fourth candle of the pattern, opens and closes, that's whenever you want to go look for that fair value gap. Well, not really closes because this fourth candle can actually, according to my rules and my back test as well, this fourth candle can actually be the candle to trigger you into the move and then sell off. So you want to make sure to, and if it taps into the fair value gap like it did in this case, you want to enter in on that. So let's say that we took entry on this candle, our stop loss would go 3 pips right above the 1 candle. We always put stop losses above the 1 candle of the 3 candle fair value gap pattern. And what are we targeting? Let's go back to our 5 minute really quick, 15 minute. We're targeting that previous day's low right here, or we can target ultimately a new low to be created for the day. So that would be an insane move, but in this case, we're targeting about a 2.5R right now. Let's go ahead and play out price. Again, we're taking entry at 8:22 a.m. Now, right now, we're not really worried about the midnight open. We are, but we're not. Obviously, if you think logically, Price already took out the previous day's low, it extended low, and now it retraced back up into like the middle point of the current day's candle. So we could see the expansion down to continue to fill the day's candle up into later on its close or whatnot. Okay, but right now we are bearish. Let's go ahead and see what happens. Very cool, very awesome. And that right here, since it was our next entry, since we never took any other entries, this was a 2% risk. So right here, you could say that you won about what is it, 5% right here? Since it was about a 2.5, let's just say it was about a 2.5 R, 2 times 2, that's 4. Half of 2 is 1. Yeah, so that's a 5% gain right here. So for the day, you would be up plus 5.70% for the day. And at this point, I would call it a day. I probably wouldn't trade anymore. Of course, you don't want to give back what you've earned. Let's just see if price would have made a new low or something, or if that's where it wanted to play it out. Oh my gosh. See, thank goodness that we exited there, you guys, because that would have sucked. We would have been kicking ourselves in the butt like, why? Why? Oh, that'd have been tough. But that is how you take advantage of that. Let's just see, now that it's up here still and we're still in the kill zone, let's see if it's giving like maybe another opportunity for entry, because you could see that earlier these highs all taken out, and now there's a market structure shift happening right here. Happened right here on this candle. Once this candle closed, now we have this fair value gap right here. Price taps into that. We'll take a sell right here. Stops will go above the 1 candle for about 5 pips. Let's go ahead and play it out, see what happens. Again, we'll target that same low down here. We'll target a 1 to 2 R. I don't like anything less than that. We'll just target a 1 to 2. Let's see what happens. We're triggered in. We got smacked out. So, and this is why you don't want to overtrade. We were already up plus 5.5%. And now we're with taking this loss right here. We are now at like 3.5% by taking the 2% loss. So now this next trade, we're going to revert down to a 1% risk. Let's see what happens though. Again, this really doesn't mean much. This is just telling us what kill zone we're in right now. And you can see that price is actually up close to that midnight open. Also, what you do want to, as soon as 8:30 opens, you do want to mark out that opening price as well. So 8:30 open is right here. And if you are bearish for the New York session, you want to be above it to take entries. You're bullish, you want to be below it, obviously. So right now we're above it. We're in close proximity with this midnight. This is looking good to take an entry. Okay, but let's just find out. We have this high here. This is the market structure shift point. The new market structure shift point. So this next candle, if it takes it out. So this candle actually cleaned out both sides, created new highs. So now this is a valid market structure shift point. That's the new valid market structure shift point now. So this candle just took it out. We need this next candle to open. Hopefully it opens, creates a small wick, leaves a fair value gap right there that we can enter off of. Nope, it closed up any fair value gap. So now there's no entry here. It's likely to go back up in my opinion. Let's see what happens. Yep, it went back up. Okay, now we're close to the midnight open, and you can see that we're getting close to 10. See what happens. Yeah, market structure shift, 9:59. And see the fourth candle triggered us in. It happened at 10. It was the setup formed within entry is at 10. Hmm, hmm, hmm. Are we breaking rules or are we staying within the rules? If we enter within 7 to 10, 10:01, all right? Let's see what happens. In this case, this will be a 1% risk. Why are you taking this entry, hotshot? Because we're local. We're local like that. Eh? Let's see what happens. Got close, but it held it. It held it. Oh. And ultimately it hit our take profit, which was the previous day's low that we targeted this whole day. That even this one tapped into and then rejected immediately. Came all the way back up. And you know what? As long as it respects that one candle, I usually like to put a little bit of breathing room above the one candle of the fair value gap, just in case it wants to come and make like equal highs of it. But you can see here, it respected it. And as long as price doesn't violate that, this is a valid fair value gap in my opinion. Let me just draw that out so y'all can see the fair value gap. Boom. That was beautiful, and that would have been 1% trade. It would have been a 1 to 4 R, 4% gain. So in total for the day, we made 7.70%. And that's how you apply the daily bias to understand what you're looking for on a lower time frame. And that's how you understand your lower time frame and how to answer on it, what you're looking for, things like that. I'm sorry I didn't really have a checklist for the lower time frame to answer off of and whatnot, but if you go back through this video and you kind of take notes, steps like that, you can kind of put something together. You can back test it yourself, but this is literally my approach to the market every day, except for Saturdays and Sundays, of course, but every day. I hope you guys enjoyed this video. Make sure you leave a like. Thank you if you watched all the way to the end. Drop a comment down below what you would like to see next. If you want any more examples like this or what you need, like if you're confused on anything, of course, I'm not an educator. ICT is the educator, but I can totally make a video on my understanding and see if it can help you. Thank you again and see you in the next video.